The stock market was mixed in wild trading on Friday, amid heavy losses this week that briefly pushed the S&P 500 into a bear market as investors continue to get whipsawed by concerns about inflationary pressures and rising rates. The S&P 500 has fallen nearly 20% from its record highs at the start of the year, which would be its first bear market since the pandemic market crash in March 2020, while the Dow is down over 15% so far in 2022. With tech stocks leading market declines in recent months, the Nasdaq has already been in bear market territory for quite some time, falling over 28% this year. This is the fourth time on record that we have seen the S&P 500 post a losing streak of 7 weeks or more, previously in 1970, 1980 and 2001, according to Nationwide's Chief of Investment Research, Mark Hackett. Unfortunately, the index was negative over the next 12 months each time, he adds. Not only is the glass half full, it's not even half empty, according to a note from Bespoke Investment Group. It's been emptied, put in the recycling machine, and crushed to pieces, as investor sentiment continues to take a big hit from rising recession concerns, surging inflation and warnings from the Federal Reserve about a painful period of monetary policy normalization. As recession fears grip markets, major Wall Street firms are warning that stocks could plunge further amid a looming economic downturn. The S&P 500 could plunge by between 11% and 24% if the economy falls into a recession, according to top strategists. Here's the worst-case scenario for stocks, according to Goldman, Deutsche Bank and Bank of America. Forbes investors have nowhere to hide as S&P 500 nears bear market territory. Forbes Dow Falls 100 points, stock market sell-off continues as major retailers warn of rising cost pressures. Forbes